This is the Global Economic Scrap Metal, Commodities and Recycling Report by BENLEE Roll-Off Trailers and Open-Top Scrap Gondola Trailers, March 4th, 2019. This is a special remote edition. Last week, commodity prices were mostly mixed and economic reports were mostly negative. U.S. steel production rose slightly to 1.907 million tons, a very good number that remains helped by tariffs, but there is downward pressure coming from global economic slowing. Oil fell about $1 a barrel to $56.24 as President Trump tweeted that OPEC is moving too fast to cut production, which is causing the rise in prices. High oil prices helps parts of Wall Street, but hurts consumers. U.S. oil production hit yet a new record high of 12.1 million barrels a day. This is great for high-wage jobs and great for creating wealth in the U.S. Iron ore fell $1.50 to $86 a ton as prices continue to come down after the run-up due to the major dam collapse in Brazil at a coal mine. Scrap steel #1 heavy melt remains steady at $298 gross ton with good global demand, while poor weather in the U.S. has dampened supply. Prices are due to be up about $15 or more this week, yet downward pressure remains with a weakening global economy. Hot-rolled coil steel rose to $35.16 per hundred on slowing demand, but Nucor and others have raised prices due to higher iron ore and scrap prices. Copper fell slightly to $2.93 a pound on global weakness but continued positive trade news talk. China consumes 50% of the world's copper, so their slowing economy is putting downward pressure on copper. Aluminum was down slightly to 85.4 cents, remaining near a one-month high with global slowing, but aluminum-intensive industries like aircraft remain healthy. Last night there was more positive trade talk on the negotiations between the U.S. and China, which could lower China's vehicle tariffs and China would buy more U.S. natural gas. China's February's manufacturing contracted for the third straight month and had the steepest decline since February 2016, with tariffs being a major issue. Output shrank for the first time since January 2009 at the depth of the global crisis, and exports fell for the 9th straight month. As a positive, new orders grew for the first time in 3 months, and business sentiment was the highest in 4 months. Initial reading of the U.S. economy was that it grew 2.9% in 2018. While ahead of recent years, it is below the 3.22 average of 1947 through 2018. Importantly, it is nowhere near the White House forecast of 4 to 6% growth needed to reduce the federal budget deficit. The White House is now saying growth will be over 3% in 2019, while the Congressional Budget Office is saying 2.3%. Vehicle sales fell to an 18-month low of 16.57 million units, as a record number of Americans are 90 days behind on their auto loan payments. Major weakness here. January's U.S. housing starts fell 11.2% from December to an annualized rate of 1.078 million, a 17-month low. This chart goes back 60 years when we had about 179 million people in the U.S. in 1960 versus 325 million today. Yet, we are building the same number of homes today as in 1960. This puts downward pressure on commodity prices. Wall Street's Dow Jones Industrial Average fell slightly to 26,026, with the Dow starting the year with the best increase in decades after the huge drop at the end of last year. Low interest rates and the increase in jobs are major positives for the U.S. economy. As always, feel free to call or email me with any questions. We hope all have a safe and profitable week.